How do you do commercial property projects using none or very little of your own money? It's a common misconception that you need a ton of cash to invest in commercial property. But in this talk, given by myself at the Baker Street Property Meet, I share with you 3 ways how you can invest in commercial property using none of your own money. That's all coming up. If you're new to this channel, make sure you subscribe and hit the bell icon. We release new content each and every week, and it's all dedicated to helping you be more successful in property. If you haven't been down to the Baker Street Property Meet, well, make sure you come along. We're the largest property networking event in the UK. We get 200 plus investors at all our meets. We meet on the last Wednesday of each month. Details of this month's meet are at www.bakerstreetpropertymeet.com. Hope to see you there, but for now, enjoy the talk, No Money Down Commercial Property Investing. Right guys, so commercial no money down. Let me just first explain what I mean by no money down and sort of define what I mean by that. What I mean is that the buyer or you, the investor, do not have to put in any equity or money into the deal. That's what I mean. Now, it doesn't mean that properties are free. Of course, the money and the equity has to come from somewhere. The thing is having the mindset that you as the investor don't have to put the equity into the deal. So where do you get the equity from? One way is, and there are many of these, but I'm going to just list the top 3. One way is to get the equity from the vendor. If you negotiate a deal which is below market value, or you use vendor financing techniques, then you are getting the vendor to contribute some of the equity that you need to do the deal. Second way is to get the equity from the deal yourself. And this is the one that I'm going to focus on and talk specifically about how to apply this in commercial property. What do I mean by that? Well, this is when you buy a property and you're using your skill, your knowledge, your experience, your contacts to do something to the property very quickly, which uplifts the value quite considerably. And that gives you that equity boost, that free equity, if you like, from your own entrepreneurial endeavor. And that's what I'm going to really focus on in the space of commercial property. Option 3 is, of course, you can get equity from private investors. And many people will do deals with private investor funding that they meet at networking events like this. Now, these are not mutually exclusive. The best deals, you'll use a mixture of all of these to get equity so that you don't have to put any into the deals that you do. As I mentioned, I'm going to talk about how to get the equity from the deal itself. Now, I'm going to share with you 3 strategies to apply in commercial property of how to get the equity from the deal using your own entrepreneurial endeavor. The first strategy is what I call find, fill, and fund. Now, step 1 is that you find a vacant commercial unit. Step 2 is you find a tenant that wants to occupy that unit. Now, the thing with commercial property is understanding how it's valued. When you have a residential property, whether it's empty or full, it's worth the same, isn't it? Commercial property is not like that. The value of commercial property goes up if you've got a great tenant paying a great rent and in for a long lease. That adds significantly to the value of a commercial unit. So if you can find an empty commercial unit, find a great tenant to occupy it, then basically secure the property for yourself and secure the tenant to occupy the property, you've got the makings of that deal with the equity coming from your own endeavor. So let me just take you through how to do that. As I said, I've only got a 12-minute slot, so step 1 is find the vacant commercial property. I got a video on YouTube, 5 golden rules for investing in high street shops. It's a 20-minute video that will tell you how to find commercial property units. So here's one we did earlier, vacant commercial unit, and it looks like that. Now you're probably wondering, I mean, this property was on sale for more than a year without a buyer. So why didn't the tenant do anything about it? How come I'm finding a tenant for it? How come it wasn't on their radar? The thing with companies and commercial properties, they don't like to buy properties. They don't want to buy freeholds. You can ask accountants, they'll tell you about balance sheets. It's not a great idea. They prefer to lease properties. So if you find a commercial property that you can buy, and then you approach a tenant who'd want to occupy it, then that comes on their radar for the first time because it's being offered to them as a rental, if that makes sense. So when you get to know about commercial property, you really get to know about what different tenants want. So I know, what Subway will be looking for, what Costa will be looking for, what Greggs will be looking for. When you find a unit that matches, and if you find something that Domino's would love, A5 takeaway, you secure it, you pitch it to them. If they take it, you do the deal, and you can do it no money down. And I'll explain how you do that. So once you find a property that's vacant, and then you find a suitable tenant that wants to occupy it, and you need to secure the property and you need to secure the tenancy. The way you secure the property is by an option. You say to the tenant, you say to the vendor, you basically do a simple option agreement and pay him an option amount to complete at a future point in time. From the tenant, you get what we call an agreement to let. So the tenant signs something that says they agree to let the property at this rent for this amount of time. When you've got those two things signed, you can then complete the purchase, because a bridging company will lend you the money to buy that property based on the uplifted value because of the tenant that you've got in it. Does that make sense to people? Yeah? Now, you have to do it with a bridge. They'll give you the uplifted value. Once the tenant has taken occupation and started trading, then you can refinance that property out to a long-term lender. And typically when you do this, you get a 40% plus uplift. Again, here's one we did earlier. Very tasty deal, unlike the pasties you get in this tenant occupier. So the property was a freehold. The tenant was found simply by contacting their head office, because I could see this parade didn't have a Greggs and they were expanding. So we contacted their head office, asked to speak to their real estate department, find out who their commercial property sources were that covered this area, pitched the project to them. They gave an agreement to let. That allowed us to secure the property on the option. A bridging finance was taken and the deal was all done. No money in. Does that make sense to people? Yeah? Strategy idea 1. Strategy idea 2, buy under-rented commercial property. Now, just like they're amateur buy-to-let residential landlords, they're amateur commercial landlords who don't really know what they're doing. They perhaps traded in a shop, retired and moved out. This was one of these deals. It was bought at an all-stop auction. It's basically 2 shops, and the landlord hadn't implemented the last 2 rent reviews. So basically it was under-rented. So it was bought at auction, 360 grand. The rents were 10K and 12K for each of the shops and a 6.11% yield. Now, because what we did is basically implemented those rent reviews. By implementing the rent reviews, basically because the rents have gone up so much in that area, it was something that the existing tenants preferred to surrender their leases and moved on. And that allowed us to find new occupiers for the property, do a little bit of light refurbishment. But the thing is, remember, commercial property is valued based on who you've got in the property, how much rent they're paying, and how long they're in there for. So, firm of solicitors, this is a carpet and flooring shop. They're in there at 23 and 25K rents per year. A valuer will value this property typically at a 6% yield. So that means the value becomes a whopping 800 grand. How long have I got? 10 minutes more. Okay. I'll tell you this little bonus thing. Who's messing around with SASs and pensions in commercial property? You're going to love this. You're going to love this because this is a little bit of an I'm going off piece now because she's saying I've got a little bit of time. Because you can generally mix up so many strategies to do some, this is really sort of tax planning on steroids, if you like. Now, you buy this property, you buy this in a limited company, yeah? what you're looking at doing is adding the value. You're adding the value purely through your knowledge, your skill in finding a better occupier to pay a better rent on those commercial units. That's all you're doing. No DIY, no builder's crews and all of that. When you get the uplift, if you've got a pension, your pension can buy this property from your limited company based on a valuation at 6%, which would value it at that much. So that means all of a sudden, from your pension, if you've got 800 grand, that moves across to your limited company to buy this property. Now, everyone knows if you're doing directors' pensions, a director of a limited company can contribute 40 grand a year tax-free from profits into their pension. So this company has made a ton of profit from this deal, which it then contributes back into the pension to buy more. So you create this circular flow of dosh, if you like, which is over and above the no money down aspect. Does that make sense to people? I know I've kind of went very quickly over that particular strategy. Strategy 3 is using your entrepreneurial endeavor to find commercial sites which have easily realizable planning gain. Now, that is a contradiction in terms, because planning gain ain't usually easily realizable. Anyone that's been through a planning process will know it's a pain in the neck, it can take 2 years, and you might not get anywhere, and it's full of uncertainty. The great thing about commercial property is that there are a ton of permitted development rights which apply. Permitted development rights are exactly that. They're national rights where you can do stuff to commercial properties. And because commercial property is changing in terms of the way people are using offices, warehouses, shops, the government have introduced a ton of PD, permitted development rights, for you to repurpose commercial buildings. Now, this is the classic one, which is a great beginner sort of entry, if you like, in. And this is to take a shop. Under permitted development, you can make the rear of a shop into a flat. And you can maintain a smaller shop at the front. We've got a video on this. You wouldn't be surprised to know. Who's seen this video with the pink hats? A few of you. So this is Kieran. She's bought this property in West Ealing from an auction. So the thing I love about some of this stuff is these deals are hidden in plain sight. Anyone could have had this. The other interesting thing about this deal is who the tenants were in this shop. The tenants were a firm of chartered surveyors. They know about all this stuff, you know, and when Kieran met them and asked them, yeah, we know about you can do all of this, but, you know, they hadn't quite joined up all the dots from an entrepreneurial point of view. You know, they know these PDs exist, but joining the dots is a different game altogether. Now, we're going to vlog this deal on YouTube, so we've done the first one when she picked up the keys, and we'll do it at future stages as well. But in a nutshell, it's double your money. Because the whole property was bought for about $240,000 at auction, not 10 years ago, about 6-8 weeks ago, basically. It's in West Ealing, W13 postcode. The flat alone is going to be worth 330 grand. So it doesn't take a rocket science to figure out that there's equity in that deal. How she funded that, why is that no money down? Our company, because she learned this strategy at one of our workshops. I kind of teach all this commercial strategies. We're funding some of the debt because with my students who learn the stuff that I do, I kind of fund their stuff. She's got a private investor on board who was also at the workshop. So she's just putting sweat equity into this deal to make it happen. It's as simple as that. So that's basically 3 simple ways, and there are many, many more. I could go on all day about this. But there are 3 simple ways of how you can get equity in a commercial property without you having to put it in. That's what this is all about. So it's buying, I talked about buying under-rented commercial property. I've talked about easily realizable planning gain. Just a couple of ideas so that you don't have to put in the equity in the first place. Getting a tenant in a commercial property which is empty suddenly ups the value. These are all things that if you've got the skill, if you've got the knowledge, if you've got the know-how, you can do in a matter of months and uplift the value of property. The market over the next few years, in my opinion, is doing Zippo. In London and the southeast, it could even fall. Many people are saying it's going to fall 5-6%. I'm not bothered, because if all the strategies I'm employing, I'm seeing an uplift of 40-50% plus within a space of a few months, so what if there's a 5-6% fall? This is the time to buy. You buy into a dip when the general market sentiment is scary, and then you just pull all your money out in no space of time at all, and you sit on it for a few years. Property ain't complicated. That's basically what I've done, and in my 30 years of being in property, that's when I've had most fun at economic times in the cycle exactly like this. And the indicators for the next few years are no different to the aftermath of 2009, 2013. It's the same stuff. And if you've been there, it's just cut and paste, rinse and repeat, dust off those strategies, and have a good piece of fun. Right, I'm not going to bang on about this. I do a workshop on commercial property. I only do 2 a year. It's not really a factory type of endeavor. The reason I do this is to teach people my stuff, and then what our company does is we actually invest and back. If people are following us ideas, then really, I mean, I believe in them. so we'll back them, basically. So we get a lot of people on this workshop. We only do it a couple of times a year. So if you're serious about commercial property, there is a brochure, and you'll get an email at some point with a discount code. Next date is in October, and if you enter the discount code BSPM, Baker Street Property Meet VIP, you'll get a 400 quid discount. That's valid until Sunday. You'll get an email about that shortly. And that's me done. Commercial property, no money down, some ideas to inspire you.
Yeah! Like that! Huh!
If you enjoyed this video, hit the like button. If you're not a subscriber, what are you waiting for? Subscribe, hit the bell icon. As soon as we upload, we'll let you know. And enjoy these. They're all dedicated to helping you be more successful in property. Happy investing!